Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of July 17th through July 21st, where we'll see if we're getting and or going to get a Christmas in July in the stock markets this year. So thank you again for joining us. This is part one of our weekly trading game plan for the trading week of July 17th through July 21st, and let's go ahead and get started. So here's our Google document with our notes for part one of our weekly trading game plan. We put our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. We store these notes for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks, and you can find a direct link to this Google Drive folder with all of our notes for our weekly trading game plans in the description box below as well. Welcome to Ricky Khan, Carmen, Nugam. Thank you all for joining us in the live chat today. Flip of the Shippa. Thank you again for joining us. Hope you're all doing well. Glad to see you today. So we'll go ahead and jump over to FinViz and look at how the markets ended up on Friday. So we can see generally the Dow was a little positive, pretty flat. The NASDAQ and the S&P seemed to have kind of a reversal. They were up early and then declined towards the end of the day. We had a market on close positive on both the NASDAQ and the S&P. More decliners, meant almost a 3-to-1 decliners, 73% decliners versus advancers for the day, although we had 84% new highs. 71% are now above their 51, so 70-30 above their 50-day moving average, and about 60-40 above their 200-day moving average. And we see, with that decline towards the end of the day, it ended up bearish. See, the FANGs were strong. There was a reversal in NVIDIA. NVIDIA was strong early on, had a bit of a reversal towards the end of the day. The other FANGs were pretty strong. Healthcare was strong with UNH having a rebound. Energy was pretty weak. Welcome, MD. Thank you for joining us. Hope you're doing well. Look at some of the quick news. Corporate America's profit engine starting to rev up. Bank results, flash warning signs, and the Dow closed 100 points Friday on solid earnings. So we saw oil popped up, it was up in the mid-upper 70s, declined down to 75. We've got support around 75 now. We had an energy report come out saying oil was expected to be higher, so we got a pump in oil. Natural gas still kind of range bound between 250 and 3, still up. Gold's holding support at 1950. It's made a couple attempts to head towards 2000 again, getting again support around 1950 or so. We saw the dollar weaken, the DXY drop below 100, and so foreign currency strengthened, and the treasuries were above 4%, and then they dropped back down a little bit, and now it looks like they're up, headed back towards 4%. And we'll see the mixture of economic data that we got. We got CPI, PPI, consumer sentiment. We'll look at all that data in a minute as well. So we'll look at each of the indices real quickly. The short term for the SPY, so we see it broke out of that uptrending channel, had a nice breakout, looks a bit extended. If we zoom out a little bit, again, we can see that strong weekly performance. It's floating quite a bit above its moving averages. Looks like it broke, it looks like it's going to retest that previous high in the 460s. So again, we could have some more upside, although again, it's levitating pretty high off of its moving averages, but we see making higher lows, higher highs. So definitely a bullish market, an uptrending market. But the Qs, even stronger, surging upwards, a lot of exuberance in technology, AI, etc. So we see it broke out of its previous high, and it might be going towards essentially an all-time high, but again we see it's levitating pretty high above its moving averages. So again, we'll get some probably violent corrections in all of these indices, given that they're so far extended at this point. But again, the trend, making higher lows, higher highs. So definitely a bullish market in the S&P and the Nasdaq. Dow's a little flatter. It's closer to its moving averages, pretty much range bound, trading laterally. So again, we'd expect kind of the Dow to chop around. We can see it's kind of barcoding up and down. So the Dow's much flatter. IWM, the Russell, and more oscillation, a little bit more volatility. It is getting support from its moving average. Looks like it's trying to, fill that gap from the big drop previously, testing that. We'll get some resistance at. Looks like we're getting some resistance at that level, so it's going to need a little bit of oomph to break out of that level, and then it can try to test the next high. So again, the Russell a little bit weaker, but getting support from its moving averages, a little more positive at this point. Look at the VIX. Again, we're not getting a whole lot of volatility. A little bit of a upsurge in the past couple of weeks with some of the economic data, and then it very quickly resides, and now it's back up below 14 again. We're just not getting a whole lot of volatility, a whole lot of fear. As you can see in the S&P and the Nasdaq, we do have plenty of greed, not a whole lot of fear right now. Welcome, Walter Lyons. Thank you for joining us. Glad to see you. Hope you're doing well. So we'll look at the groups, the sectors, the industries, etc. also in FinViz. So again, we had quite a reversal during the day. Early in the day, many of the sectors were positive. Financials had a boost. We had some earnings from JP Morgan, Wells Fargo, etc. that were positive, and then a fade towards the end of the day. Energy was very negative. Again, we saw oil recede after making that pop up over 75. Healthcare was really the only significantly positive, and some defensive. So again, we saw some defensive reaction towards the end of the day. Real estate slightly negative, but pretty mixed. For the week, basic materials made a recovery. Real estate still trying to make a recovery. Energy only slightly positive. Technology kind of in the middle. Same thing for the month. We can see real estate slowly moving up, basic materials slowly moving up, energy is still in the lower tiers, and we see that healthcare reaction on Friday was pretty much, an underperformer to an outperformer type of sector rotation. And so we want to look for those sector rotations and take advantage of those when we're able. Walter Lyons is asking about the NASDAQ special rebalancing. We'll talk about that. So if we look at the industries, again, we saw UNH, drove healthcare plants up. We saw, textiles, again, also the home builders. We've been talking about, positive runs in the home builders, and that is expected to continue. Saw silver made a nice bounce. We'll see that in the futures. Some of the REITs did recover somewhat and then receded a little bit on Friday. Semiconductors in general were slightly negative, although again we saw a surge in NVIDIA early on. Some of the materials, copper negative, aluminum was the most negative, uranium was negative, but still the longer term trend has been up recently. We're going to look at solar. We've seen these sector rotations in and out of solar, and see if we can take advantage of that rotation as well. We see for the week, silver made a recovery, gold made a recovery, copper for the week was positive. REITs, some of the REITs were positive for the week. And weakest were airlines, coking coal, thermal coal, so coal. Surprisingly, with the strength in oil, I was a little surprised that coal didn't have a better recovery for the month. Oil was positive, but again, recently, energy was generally negative. Okay, let me grab a drink and we'll look at the economic data for the past week and then also for the upcoming week. So I'll bring up the economic calendar for investing.com. And again, I'll go through my notes from the past week first, and then we'll look at the upcoming economic data and how that might impact our trading as well. Okay, Monday, Tuesday were pretty slow economic data wise, and then we got CPI on Wednesday. We also got mortgage applications, which were actually positive. Then we got CPI was lighter than expected. So as we've been talking, inflation is slowly coming down. So this is consumer inflation data for June. So the month of June was 0.2 versus 0.3 expected. So again, inflation very slowly coming down, received very positively. That's what the Fed wants to see, is inflation coming down. So for the year, 4.8 versus 5. So again, inflation very slowly coming down, but still nowhere near the Fed's 2% target. And I heard Jay Powell, I believe, said that he doesn't expect to reach their 2% target this year. So again, the probability of their 2 rate hikes that they broadcast is still very high. So as we've mentioned, we expect. Again, just a quick reminder, none of our commentaries should be considered financial advice. We're not financial advisors. All of this is for education and entertainment purposes only. And Thursday, we got PPI data as well as jobless claims. So again, the PPI data, the producer inflation was less than expected for June. So again, slowly coming down on the front end of the supply chain. So again, very positive from an inflationary standpoint. But again, it's a very slow decline. It will take quite a bit of time for that to filter through the economy and get inflation down to the Fed's 2%. The jobless claims was a little interesting. Continuing claims are a little higher than expected, but initial claims was significantly less than expected. So the layoffs are not really hitting the job market. And few people, the people that can't find jobs, it looks like they're continuing a little bit. But people that are losing their jobs, probably tech sector, etc., are finding jobs quicker than expected, and the degree of layoffs is not as high as expected. So again, job market's still resilient. The Fed can keep hiking, not risking high unemployment. Um, the weekly average, again, is less than expected. So, a lot of the people are able to find jobs, and we've seen that in the JOLTS data, and we've talked about that as well. So again, job market's resilient, inflation's coming down slowly. So again, very positive, and the market reacted positively. We saw there was exuberant runs in the S&P and the NASDAQ, and I would expect that to continue until we get the Fed hike, which I expect them to go 25 basis points in July, and we'll see that that's upcoming in July 25th and 26th. We also got positive Michigan consumer sentiment data. See, inflation expectations was as expected. But the sentiment was much more positive than expected, so the consumers are feeling good, and that probably reflects in continued high spending, which is actually a negative in terms of inflation, but positive in terms of the overall economy. The longer term inflation expectations was a little bit above what was expected, 3.4 versus 3.3, but again, not significantly worse than what was expected. So again, all the economic data we got last week was positive, and again, but Wednesday, Thursday, and the first part of Friday, we got positive market reaction, pretty exuberant market reaction. And then we got a little bit of, probably profit taking correction on late Friday. So I'll spin through that in investing.com, and we'll see next week. Tuesday, we got June retail sales data, and we'll talk a little bit about that relative to the Christmas in July. And then Thursday, we have jobs claims data. See what we also have for, see if I missed anything from this week. Got Fed speakers, so we'll hear, them discussing when they think they're going to do their rate hikes. Are they going to need to? That would be the expectation. Crude oil stock was, much higher than expected. That might have contributed to the price coming back down a little bit. Real earnings was more positive than expected. So, people are wage inflation, people are making more money. Again, crude oil inventories. So the Cushing was more negative than expected. And we covered jobless claims, again, Fed speakers, Michigan sentiment we talked about. Baker Hughes, so the rig count's dropping, continuing to drop. So the U.S. oil companies are, holding the oil production levels, decreasing production levels, holding the prices up. Look at next week. So not manufacturing on Monday. And then we get retail sales. Again, this is for June. And again, I'll talk about this probably more later as well. But June, I would expect to be a little bit down, a little bit weak for retail sales in June. And then in July, we just had Prime Day. And then we had a lot of other retailers also offering sales at the same time as Amazon Prime Days. And so I expect July to rebound, but I think the June sales data is probably going to be a little bit weak, although they're forecasting it to be a month-on-month positive. So this might cause, a negative reaction in retail. Again, we saw some run-up in the retailers, particularly the online retailers, around the Amazon Prime days. So again, my opinion, we might see a little bit more negative than expected in June and then a rebound in July. So opportunities to play that Christmas and July bounce in retail. Get mortgages on Wednesday, building permits, housing starts. I think, the home builders are going to continue to do well. Get oil. Hit some Philly Fed data, manufacturing data, leading indicators expected to be less negative. So natural gas storage and rig count. So not a whole lot of major economic data for next week. I think also the Fed officials are now in their quiet period going into their the next interest rate decision, the 25th and 26th. So again, we probably won't get a whole lot of additional volatility from the Fed officials. We also just started into the next major earnings season. As you can see, you can get the earnings calendar here, and I'll show you in a minute in Webull where you get the near-term earnings calendar. Again, one of our themes, one of our strategies for this week is that earnings matter again, and I think we're going to see a lot of the focus in trading will be based on the earnings. If these companies outperform earnings, that company will do well, and we'll see positive reaction in the same sectors. If they miss on earnings, get negative reaction, could be dramatic, and we might see some negative reaction in the same sector. So it's important to see who's reporting earnings when, and trade, we can take advantage of irrational reactions to those earnings and also the sympathy in the same sector. It doesn't look like I didn't see anything major on Monday. Tuesday, we got Bank of America, Morgan Stanley, some more financials. We got some defense, Lockheed Martin, more banks. So a lot of the financials are early in the earnings season. Again, you can go through this, and we get Tesla on Wednesday, so that'll be a major focus. Netflix, IBM, so we start to get the FANGs, the big techs, etc., and there'll be a lot of focus on those. That'll probably impact the FANG stock significantly, as well as the rebalance that we talked about. Got some miners, Baker Hughes, some oil. So again, a lot of earnings starting to come up, and I think that will be the focus of uh, traders, is the impact of these earnings on those companies, as well as related companies in the same sector. Taiwan Semiconductor, J&J, Abbott. Okay, so all the big guys are starting to report. So again, I think earnings matter again, and we'll reference our previous discussions on how to play earnings, how to make money trading earnings when earnings matter again, as well. So highly recommend that you review the earnings calendar, and see how that would affect your trading and your trading opportunities. So I hope that all helps. Also, as I mentioned, the next FOMC meeting is July 25th and 26th. So again, I expect a 25 basis point hike in July, and then we'll see. August, there's no meeting. They have their Jackson Hole conference, and then the next meeting is September. So we'll be listening to the commentary in July as to whether they expect a second hike in September or possibly later in the year. Okay, we talked about the earnings calendar. Now we'll jump over to Webull and we'll look at the market screen. Let me grab a quick drink, check the comments. Just a quick reminder that Webull is still offering their 12 free fractional stocks. If you open a new account, they're also offering a 5% interest rate on your idle cash balance if you use their cash management system. So pretty good return for your idle cash. As you'll see, we use Webull for our market analysis, our due diligence, the majority of our trading. So if you're not already using Webull, we would recommend it as well. And if you use our affiliate link in the description box below, you can also help support our channel, which we greatly appreciate as well. So this is the market screen in the online browser version of Webull, which I prefer to use. They also have a desktop and a mobile app. I also use the desktop version, but I primarily use the online browser version. So you guys talk about KRE. We'll possibly look at the ETFs for the financial sector. We also have a video, and I see Flippa looks like he likes to trade options in Webull. Yes, we also use Webull for trading options. So if we look at the histogram for the advancers decliners for Friday, again we see many more decliners than advancers, about just over 2 to 1, but we see the degree of decline was very small. Long tail of advancers, so we see some that made a significant amount of advance, small number. Look at the inflows. So again, a reversal from what we saw the past couple weeks, where now the NYSE got a positive inflow, and again on Friday there was outflow out of the Nasdaq. So probably again profit taking in some of the FANGs, some of the mega cap techs that have run up so much. Again, you can also see the earnings calendar here on the market screen in Webull. Flip the calendar, you can see the near-term earnings calendar, so it's a good way to keep up with the next set of upcoming earnings. Also see dividends and splits, so again, easy place. If you're already in the Webull app, you can see what the upcoming earnings are and whether it's before market open or after market close. So look at the best performing industries for the week. So we see financials kind of mixed. I saw you, again, you guys were talking about KRE was kind of mixed, up and down. Home building, very positive. Uranium positive. Metals in general positive. Gold miners. Again, we saw silver and gold made a recovery. Retail, again, positive in general. Banking, again, the financials, some of the financials, JP Morgan and Wells Fargo were positive, beat earnings. Again, retail. Real estate, a little mixed. Semiconductors, generally positive. Again, we saw a significant rally in all the techs on later in the week after the CPI, PPI data. Look at the ETFs. So short on China, up on small cap. Oh, that's down on small cap. That's a bear ETF, TZA, short on the Russell. So again, as we saw, some risk, some weakness in the Russell. Up on the Dow, short on mid caps, short on mid caps. Okay, so that's again short on the small caps. So reversal from what we saw the past week or so. So again, weakness in the Russell and small and mid caps. Short on the VIX. Again, we don't see the VIX holding its pops. Again, bears on the Russell small caps. Short on China. Short on Europe. When we get to the futures, we'll see the bounce that we got both in Europe and in the DAX, and some opportunities to potentially take advantage of both longs and shorts in Europe and the DAX. Industries from Friday, mostly red except for healthcare, consumer defensives, a little bit of cyclical, homes, home building, some real estate positive, commodities, livestock, copper, wheat, corn. I haven't seen Easy Mike yet in the chat, but he was mentioning the rebounds in wheat and corn. Copper, wheat, corn. And some of the 10 years, 3 to 7s. Corporate bonds, 0 to 5, tips. So euro down, British pound down. So it looks like, that dollar weakness, those bounces in the foreign currencies, possible a slight reversal from the significant bounce that they'd had. Okay, so let's also look at the futures, FinBiz. So again, we can see these runs in all the indices. So the S&P futures are broken out. Looks like might be testing a new top. Nasdaq same way, testing a new top. So we might get a little bit more of a reversal, test the previous top, and then again I think the overall trends are up, bullish markets at least until we get to that next Fed interest rate hike. Again, we don't have any economic data that would warrant a major correction. Russell looks like it's already rolled over. Looks like the Nikkei is looping back up slowly after making a multi-decade high. And then we see these dramatic bounces, first a dramatic drop, and then a dramatic bounce in both the Euro stocks market and in the DAX. And I want to look at some ETFs, how we can play this type of behavior, take advantage of this type of behavior. Unfortunately, my mindset was looking at this short as these were hitting their top, and it caused me to both miss the short, to not execute nimbly enough to catch the short, and then to not flip my mindset and try to play the long. So realize, I should have been, when we saw that dramatic drop, I should have been thinking about potentially playing the long on the bounce. So again, we're going to identify some ETFs that we can play this type of behavior, both short side if we have that opportunity in an ETF, and definitely, on a bounce like that with a long ETF. So we'll be looking at some ETFs to play long the DAX, the German DAX, and also both sides of the long and short for the Euro stocks. And so we could take advantage of those opportunities. We see oil ran up to the mid 70s and peaked out. Looks like 75 support, so it'll probably bounce off there. Got resistance again at 80, so we'll see if it oscillates between 75 and 80 now. Dramatic drop off in the VIX. Get natural gas, is kind of oscillating now between 250 and 3. See that recovery in gold, so it looks like it's going to test its previous consolidation range and then possibly go up to 2000 and test. We got support at 1950 or so. Sees that big breakout in silver, and it's filling the gap on that big drop, so it could have significant upside to test the previous highs in at least at 26, and then we'll see if it extends from there. Recovery in platinum, copper, less so in palladium. See the bounce in corn, a little bit of bounce in wheat. I was looking for a ETF to be able to short that extended run in lumber, and I wasn't able to find an ETF to short lumber. There's a couple to long, so I think it's both wood and cut are on lumber and timber. ETFs to play lumber long, but I couldn't find one that's I could short, but they may be shortable if you want to short shares of those ETFs. We saw the recovery in the bonds. Again, the yields had gone up to 4, and then they dropped back down. See bonds recovered somewhat, and then retraced a little bit on Friday. We see that dramatic decrease in the U.S. dollar. DXY dropped below 100. Looks like it made a little bit of a bounce on Friday, but again, very dramatic drop. So we got run-ups in all the foreign currencies. We'll see if now that 100 level is probably a pretty good resistance. We'll see if we get a further decline in the dollar. Okay, let me grab a drink and I'll bring up our ETF spreadsheet. If anyone has a particular index category, commodity you want to look at ETFs for, we can look at those in our Google Sheet. I'll grab a drink and we'll take a look at our ETFs and talk about some of those opportunities. Welcome pre-information. Thank you for joining us. And yes, flip the dollar weakness is good for your dollar-denominated commodities, gold, silver, oil. So, and that might have also contributed to the previous upsurge in oil, but again, it was declining now towards that 75 level. I'll zoom this out just a little bit. Again, we saw that dramatic run up in the technologies. We've talked about the technology components, semiconductors, biotechs, etc., the FANGs, and we'll look at the technology components in a minute using our screener. Just a quick reminder, if you'd like access to this ETF Google Sheet, you can have access to this Google Sheet via our all access or VIP levels of our Patreon. And we also give you access to our dividend payers and our options spreadsheet, our puts ROIC spreadsheet that we use to identify opportunities to sell and buy back puts. Again, by joining our all access or VIP level or our Patreon, which also helps support our channel. And then you can look up, opportunities to use these ETFs and also the current pricing, etc., support, resistance, reward, risk reward, etc. So tomorrow we're going to talk about the opportunity and potential opportunity in SARK, which is the short on ARK. We've been, looking for opportunities in the cannabis, MJ or MSOS. Our opportunities there. Again, China's been volatile, so you can, short-term trade China with yen and yang. Our preferred ETFs we're watching for. Well, we're long already BDRY, so you can see there's an opportunity there. Wanted to talk about the Europe specifically. We saw that big drop and then that bounce in Europe, in the FTSE Europe market. And so I wanted to highlight the ETFs to long or short the Europe. So these are the ones that we're looking at. If it does peak out again, we're going to be watching EPV. We'll use the top in EURL, which is the bull 3x on the Europe, FTSE Europe. So if that peaks out at, that 2470 or above, then we'd be looking at longing EPV, and which would be shorting the market. Then if we get one of those dramatic drop-offs and bounces, then we could use EURL to long the FTSE Europe. So again, those are the two ETFs that we're looking at to play that kind of bounce in the European stock market. We'll also talk about FANG-D. We're watching FANG-D, and again, FANG-U is the long on the FANG stocks. I kind of suspected that this rebalance, this NASDAQ rebalance, would cause a reversal in the FANGs. They'd been, exuberantly strong, and that was the case early in the day. Unfortunately, I was away from my desk when it did do the reversal, but towards the end of the day, we saw a reversal and a sell-off in the FANG-U, so a bounce back in FANG-D. So we'll see if we get another opportunity in that, and we'll talk about that in more detail tomorrow as well. We've talked about Japan, the Nikkei. You can long with EZJ and EWV short. So again, to play the Nikkei index, those are the ETFs that we use. Natural gas, again, short-term trading. You can boil and cold, typical. You can also UNG, UNL, gush and drip for oil. SOXS and SOXL to long and short semiconductors. Again, we'll be looking at the semiconductor sector, see if we get a peak in semiconductors and possibly short with SOX. So let me jump over to that screener. Actually, let me go to the German DAX. So just a couple of notes on our ETF spreadsheet. is we've removed some that are no longer active. So I took off ONG, GAS, which I found are no longer active. And then we were talking about ways to long and short the German DAX. We saw again that dramatic bounce in the DAX. So I went to the ETF database and found the ETFs that were available in the ETF database relative to the German DAX. And I put those in the ETF sheet in our ETF Google sheet. And I want to look at each of those, and we can see the risk reward profiles for those uh, ETFs to play the German DAX. So if you go to the bottom of this ETF database sheet in our ETF Google sheet, you can see the set of the ETFs from the ETF database for the German DAX. These first set of columns come out of the ETF database, so I just copy paste their table in here. The second set of columns are the Google Finance pricing, current pricing, so we can see that, and then I manually go and identify the support and resistance levels so that we can see the risk reward profiles for short term. The 52-week is based on the Google Finance functions for their 52-week high and low. And then again, I manually identify the bottom price and the top price from the FinBiz charts. And then we can see, the shorter term risk reward profile for each of these ETFs, as well as the 52-week and the overall bottom to top. Also got whether they're optionable. I'll get that from FinBiz. And I also captured in FinBiz, we can see that some of these pay a dividend, a small dividend, except for FLGR pays a 6% dividend. So we see all of these really, their 52-week is, 1.5 is about the best risk to reward profile from a 52-week standpoint. From a longer term, some of them have a 2 or even a 3.5 risk reward. And the shorter term, the risk reward profile is pretty small. Again, we saw that dramatic bounce. I don't see an obvious choice. We see some of these are not currently available. This one's pending. This one's not found in FinViz. So I highlighted those to identify that. But again, I don't see a strong preference yet in these ETFs for the German DAX. So I'll leave them here in the ETF database sheet until we see ones that we prefer. I was not able to find any to short the German DAX, either in the ETF database or in FinViz. So again, some of these are probably shortable if you want to short individual shares. If the DAX peaks out and you want to try shorting to get that kind of dramatic drop that we saw. But again, to long, depending on what you're looking for, most of them are optionable, so you could sell covered calls. Most of them pay a small dividend. So again, you can use this Google sheet to identify your preference as to what's the best ETF given your situation, your preference, your trading time frame to long the German DAX, or again, if you want to short shares of these ETFs. So I hope that all helps. Again, at least give us some options as to how to trade those dramatic price action in the German DAX. So again, I hope that all helps. Okay, I also want to look at the technology components, which is in our screeners tab. We have other screeners that I've used in the past. I'm starting to look at some of these others. It's kind of hard to find good value stocks that are at a good price right now. So I'm starting to look at some of these others, and you can use them as well. So we see that exuberant run in the Fang U. I was watching that on Friday and just missed that reversal. We see, a strong morning star. It didn't quite reach the upper trend line. I was kind of looking at that 220 type price to see if it was going to test that. Then I saw it break down below the VWAP. Saw FANG D, which is this short, break above the VWAP, and again, I missed that. It was about 12:45 or so, and I was already on my way out to the beach at that time. See LabU, biotech. I see several people talking about XBI, which is one of the biotech indices. Again, LabU is the leveraged ETF on biotech. See, it's kind of oscillating around that pivot point. See, semiconductors again, it peaked up, tested that upper trend line, rejected pretty quickly. Again, I didn't catch that opportunity, but again, that's an opportunity that we'd like to take advantage of with SOXS shorting semiconductors when it hits resistance on that upper trend line. NASDAQ's breaking out, exuberant run in the NASDAQ. TQQQ broke out of that upper trend line. And again, SQQQ would be the short. But again, you see that exuberant run. There's a lot of exuberance in technology and AI, so I'm a little bit more hesitant. I think the NASDAQ rebalancing again, they're decreasing the weights of the large mega cap techs, Apple, Google, etc., and distributing that to the rest of the NASDAQ 100. So any of the indices, ETFs, etc., that follow the NASDAQ, the QQQ, they're going to be selling the mega cap techs, the FANGs, what they call the Magnificent 7 or the Magnificent 10, and they're going to be buying some of the smaller ones to which that redistribution occurs. So again, we'll be looking at opportunities. Thank you again, Solidago, Walter Lyons, for posting that news article in our Discord about the NASDAQ special rebalance, which again was announced on the 14th. It doesn't take effect, I don't believe, until the 20th. Yeah, takes effect on July 24th, and we're kind of waiting for the news specifically. We know, I believe I heard they're reducing the percentage of the top, 7 to 10 that were over 50% of the weighting in the NASDAQ to about 30%. So that means about 20% of that market weight is going to get redistributed. So again, I think the FANG stocks will see some sell-off because again, any of the indices, ETFs, etc., that follow that mega cap techs that make up that high percentage, they're going to have to rebalance. So they're going to have to sell some of the mega cap techs and buy up some of the smaller ones that are benefiting from that rebalance. So when we hear who they're rebalancing to, again, we can take advantage of those long. Thank you again, Walter, for sharing that information. Appreciate all of your help, support, and active participation. Okay, so very quickly, we'll talk about the rest of our strategies for this week and going forward for the month of July. Welcome, Easy Mike. Were your ears burning? We were talking about you earlier. Thank you for joining us. So again, we talked about this Christmas in July, and I picked that theme both for the Amazon Prime days that occurred and also the exuberant run we got in the markets for, the positive CPI, PPI data. So again, kind of a Christmas in July, we got kind of a present from that positive reaction to the CPI and PPI. Hopefully you're taking profits when things get overextended, or at least protecting your profits. Again, our adage is, be fearful when others are greedy. And I'm not going to look at the fear and greed index right this second, but you can access that on our webpage in the links. You'll find the fear and greed index in the link section under tools and resources, etc., as well as ways you can contact us, ask any questions, links to our communities, our Discord, Facebook, etc. I saw the fear and greed index was in the extreme greed. which is not surprising given the exuberant run. So again, protect your profits. Be fearful when others are irrationally greedy. We talked about earnings. Again, I think the theme for this week or the next couple weeks is going to be earnings. Focus on earnings and its impact on sectors. So even more so than sector rotation in general, I think the focus needs to be on earnings and irrational reactions to earnings. Also, you can access that video. We've had a discussion about how to trade, how to make money trading earnings. You can access that video in the link in our Google document as well as on our BeachBum Trading YouTube channel. We've also got videos released on how the markets typically perform in July, how to make money trading in July, how the markets perform in the summer, how to trade the stock market doldrums for the summer, etc. So you can access all those previous videos via the links in this Google document. We looked at the technology components, and tomorrow we'll look at dividend paying stocks and also our option strategies um, for selling and buying back covered calls, selling and buying back cash secured puts. So again, we'll talk about that in more detail tomorrow, and we'll also pick our individual stocks, individual ETFs for our top swing trading stocks to watch for next week. And again, we'll talk about our dividend payers and our option strategy and look for other opportunities to make money, while we wait for better trading opportunities to present themselves. Welcome, Ricky Khan. Thank you for joining us. So, I'm sorry we're getting close to the end, but I have a few minutes to answer any questions or look at any individual stocks, ETFs, etc. that you'd like to look at. Otherwise, if you would like me to look at a particular stock or ETF, or research a dividend payer or an options opportunity, you can put it in the comments to this video. You can contact us in our free Discord. You can find a link to our Discord in the description box below. Tag us in our Discord. We're BeachBum Trading. No numbers, no hashtags. So it looks like we got an imposter. I'll deal with that as soon as we finish. It looks like the auto mod I turned on in the Discord didn't catch that one. It's been catching some of them. But I'll take care of that. Just tag us in the Discord and you can ask any questions. Also, again, we have a Facebook group, a Reddit community, etc. You can find links and contact us. Also via all of our other social media sites via the links in the link section on our homepage. Our homepage is beachbumtrading.com, bum without the U. So again, plenty of ways to contact us. Let us know of any stocks you want us to look at, any questions you might have. We're here to help you succeed in your trading, make money trading, and succeed in your trading career. So please let us know how we can best do that. Also, if you have any recommendations for improvement to add value to our weekly trading game plan videos, live streams, any of our other videos, any of our communities, we welcome and appreciate any recommendations or suggestions that you might have. So yeah, easy, Mike. That's what I was saying. If your ears were burning, we looked at the futures and we talked about that wheat corn rebound that you had mentioned the other day. Okay, if nobody has any other immediate questions or comments, we'll wrap up for today. And again, I hope you'll come back tomorrow, same bat time, same bat channel, 10 a.m. Eastern, and join us for part 2 of our weekly trading game plan for the week of July 17th through the 21st. Again, we'll select our top swing trading stocks to watch. We'll look at dividend payers. And again, I can answer any other questions, look at any other individual stocks that you all might like to at that time tomorrow. So thank you to everyone that joined us in the live chat today, and thank you for everyone who's watching this after the fact. Greatly appreciate your active support and participation, and have a great rest of your Saturday. We'll see you all tomorrow. Thank you.